warm welcome to all the viewers to my YouTube channel, the IPO Hawk. In this video, I will be analyzing the Burger King IPO which has hit the market and will enable you to take an educated and a firm decision as of whether you need to subscribe to this IPO or not. So without wasting much of your time, let's move into the analysis section. About the firm, Burger King India Limited is an Indian subsidiary of the US-based restaurant brand, the International INC, via the holding company called as the QSR Asia. It has an exclusive right to establish, develop and operate Burger King branded restaurants in entire India. The Burger King brand is the second largest fast food burger brand globally with over 18,600 restaurants across the world. And BKIL is the fastest growing international QSR chain in India during the first 5 years of their operations based on the number of restaurants they had opened. And Burger King India aims to cater to Indian tastes and preferences by adding new food offerings to its product portfolio. The company established its branches in the high traffic areas in the key metropolitan cities across the country. And as of November 2020, Burger King India had over 261 restaurants and 9 sub-franchised restaurants, of which 249 were operational, including 2 franchised Burger King restaurants. Under the Master Franchise and Development Agreement, the company is required to develop and open at least 700 restaurants by December 31, 2026. In this slide, we can have a look at the market share based on the number of outlets and revenue. As usual, it's not a surprise to see that Domino's is ruling the roost in both the parameters, and we can have a look at the other players in the segments as well, like KFC, Subway, McDonald's, etc. Objective of this IPO is to raise funds for the repayment and the prepayment of the outstanding borrowings of the company, and for further capital expenditure, and finally the general corporate purposes. The company has fixed the IPO price band at around 59 to 60 per share, which is almost 5.9 to 6 times of its face value of the equity shares. One can bid for a minimum of 250 equity shares and in multiples of 250 equity shares thereafter, which means the retail investors can apply for maximum up to 3,250 equity shares at a higher price band. And with respect to the IPO dates, it is open between December 2nd to December 4th. So we have got 3 days to really decide whether you have to subscribe for this IPO or not. And the minimum investment from your end will be around 15,000. That is in case if you are willing to go for a retail investment. And at the other end of the spectrum, the maximum investment for a retail investor will be around 1,95,000. One striking feature of this IPO is the fact that the retail investors have been allocated only 10% of the total allocation, which means that we are very unlikely to get a lot even if we subscribe for it. And even if you are going to get it, it's not going to be more than 1 lot. And the qualified institutional buyers occupy the major portion with around 75%, and the high net worth individuals or the non-institutional investors occupy the rest of the pie with around 15% being allocated to them. The near-term financials of Burger King India has remained under tremendous pressure, with the company already suffering a loss to the tune of around 118 crores INR in the first half of the financial year 2020-2021. Further, turnaround is expected only in the financial year 23-24, probably led by benefits from rising economies of scale and new store openings. So if you're going to invest in this IPO, you're going to look at long-term returns over a period of say 3 to 4 years. And one more parameter which I felt was interesting to analyze this IPO is the enterprise value to sales ratio. The enterprise value to the sales is a financial ratio that measures how much it would cost to purchase a company's values in terms of its sales, which means that a lower EV by sales multiple indicates that a company is more attractive investment as it may be relatively undervalued. With respect to this metric, there is a positive news if you are going to buy this IPO. Burger King is offered at around 2.9 times the financial year 20 EV by sales in comparison to 8.4 times for Jubilant Foodworks and 4.4 times for the Westlife Development, which are considered to be its immediate peers. Now we have come to one of the most sought after section, the SWOT analysis. So let's start with the strength of this IPO. It has got the exclusive national franchise rights in India with strong customer proposition, brand loyalty, and further the Burger King offers variety of burgers at affordable prices, and it is vertically managed and has got a scalable supply chain coupled with well-defined restaurant rollout. And last but not the least, it is managed by a competent and an experienced management team. And these are some of the key strengths of Burger King, which will help post good operational performances in the coming years. Coming to the weakness, the company has got poor financial fundamentals, and the financial performance for the past 3 financial years have not been encouraging either. As we all know, the QSR segment is a highly competitive industry with multiple players, and the fact that the COVID has also been delaying the recovery or the few weaknesses of this IPO. And even historically speaking, the domestic food service industry has not rewarded investors well, probably with the exception of the Jubilant Food. So on the whole, whoever enters into this industry in the primary or the secondary market is always going to face the heat of not being able to provide the return on investment for the potential investors, and that will always weigh on the shoulders of any player who is going to enter this segment. So let's look at the few potential opportunities. As the store count will increase in the future, the operating leverage will kick in and the company will be able to report good profit. Further, the strong franchise model, negative working capital, market share gains from standalone players, and strong store expansion plans would help in improving the growth prospects in the coming years. The QSR chain also knows how to bend its product based on the preference of the Indian traffic. They add extra flavors and ingredients which will definitely suit the Indian taste and palate. Moreover, with this crisis, the customers are more inclined towards home delivery than dining at a restaurant. As soon as the QSR chain was able to abide by the government rules and regulations, the sales began to increase rapidly. So in a way, with the pandemic, the home delivery sales have increased compared to the past sales. So these are the potential opportunities which the Burger King India can tap and probably give a good return on investment for the potential investors. The threats. For the past 3 years, the company has been reporting losses. So there is a high probability that such losses may repeat in the future fiscal years as well. Further, the sales may get less due to the pandemic as people are resorting to healthier food and healthier lifestyle, hence might avoid junk food and fast foods. And then the development of the Burger King restaurants majorly relies on the master franchise and development agreement. So any potential termination of the agreement may hurt future plans. These are some of the few threads which we can foresee at this point of time. So now after this SWOT analysis, let's move to the verdict section where you can really try to come to a conclusion whether you should really subscribe to this IPO or not. Now let's see what is the Hawk's verdict. Amidst the global pandemic where the company is facing heavy losses, it may be risky to invest now, even considering the fact that the valuation is low. But if one looks ahead, investors can remain optimistic with the investment and may expect future gains. So to conclude, the conservative and core portfolio investors should skip this IPO ideally. But if you are going for a risky and an adventurous investment, or in other words, if you are a real gambler, then you can go ahead with this IPO. And one more point which I thought is worth mentioning is the fact that there has been a lot of traction which has been gained in the grey market. In fact, some of the news reports suggest that the premium is around 56% in the grey market, which means that there is a good possibility of listing gains for this IPO. So if you are going to really look at a very short term in terms of only getting the listing gains, there is a possibility that you might hit the jackpot as well, but it's also more of a gamble. So if you are really a gambler, you can really go out there and try to subscribe for this IPO. And we also saw that earlier that the retail investors percentage allocation is very less. So even if you are going to subscribe, the chances that you are going to get allocated this IPO is very less. But at the end of the day, you can still go to the secondary market and try to allocate some of your portfolio in buying this in the secondary market as well. So that is the verdict for this IPO. We come to the end of this video. Hope you found the information to be insightful, and do let me know in the comment section if you find any clarifications, if you require more clarifications, or if you feel that I should have included something more informative for you to make an educated decision. So you can reach out to me through the comment section. And further, do subscribe to this channel because there are upcoming IPOs in this month of December, such as the Nazara Technologies, the Kalyan Jewelers, and Railtel, which are considered to be promising IPOs. So I will see you in the next video where I will be analyzing any of the subsequent IPOs which are going to hit the market in the near future. So until then, this is Raghav signing off from Chennai. Thank you very much. Bye.